calling Herald Van Der Linde as head of Asia equity strategy at HSBC. Herald, great to have you with us here. Thank you very much for your time. As we read out that call from a JP Morgan global analyst who said that, well, remain very positive on India. The structural drivers are in place, but near term, risk of derating because of high domestic rates and perhaps a little bit of downgrade to growth estimates, etc. How are you feeling about the Indian markets and where we are at? We're almost at new all-time highs. Go on, Herald.
Well, we feel pretty good, actually, about Indian markets. It's one of our top big markets. We've been overweight since, late last year or something like that. And at the beginning of the year, India struggled a little bit because all the money was going into China. But yeah, you see that there's a bit of an underwhelming cyclical recovery coming through in China. The earnings actually look okay, but there's worries that maybe this is a little bit of a slower recovery there than it is. So people have reallocated to India. If you now look at India itself, the earnings come through pretty okay, particularly on the domestic side. Valuations are lofty. Yes, maybe there's a bit of compression taking place, but if you got 20% earnings coming through this year, yeah, maybe the PEs come down a little bit, but that gives you still maybe 10, 15% upside in Indian equities. So it's a market we like.
Okay, so you've been optimistic on India ever since I've known you. I mean, you're the perennial optimist, right, Herald? I think last 10, 15 years. And that's great. I mean, it's worked out. It's worked out very well for you. But just wanted to put some numbers to that. You said a 10 to 15% upside in the near term. Where do your preferences lie in terms of individual sectors? Because clearly banks have been the big leaders. IT has taken a bit of a back seat. But you folks have been bulls on IT for a very long time as well. From here on, what do the sectoral preferences look like?
I think the way to approach India to a very large extent is not to look at the sectors just as such, but actually look at another theme, and that is distribution capabilities, getting to local Indian consumers. And that could be a bank, that could be a retailer, that could be an auto company, anything like that. That's what we like to a very large extent. So we like the domestic sectors in that sense. We like the banks, we like the consumer sectors, but it's the one that have good distribution capabilities that's of importance. And that might sound logical, but I think in China, it's not distribution I'm looking at, it's brands I'm looking at. India, distribution capability. So yeah, jewelry retailers, food manufacturers, cigarette companies, you name it, all of that stuff.
Very interesting, Herald. Interesting to hear that approach. But let me just pull back away from India for a bit. Of late, one keeps hearing of a narrative around China, which isn't very reassuring in terms of, I'm just trying to ask you whether you think that's a new emerging risk. Just this morning, I was reading a piece on the property market there where the pace of price rise isn't as fast. Basically, once the U.S. debt ceiling is behind us, we're over and done and, above that hill. Do you see any other cloud on the horizon?
For China, I see many clouds on the horizon. There are quite a few challenges that they need to sort out over the course of not only this year, but over the course of the next couple of years. That means ensuring domestic growth is continuing. There's a debt problem that they need to deal with in China over the next couple of years. So there's plenty of stuff for that to do. However, sentiment and valuations on China is extremely poor at the moment. Sentiments is pretty much at a 10-year low. Valuations are extremely low. The earnings actually are not too bad. They've been upgraded in China over the last couple of months because the expectations from the analysts were so low as well. So actually, from a pure equity point of view, things look okay in China. And if then the global macro and the dollar and the bond yields move in the right direction, China is quite sensitive to that. That would help that particular market as well. But yeah, unlike India, where I feel very comfortable to say probably over the next 3 years, you're going to have on average 15 to 70% earnings growth. I do not have that confidence to say that in China over the next 3 years.
Although, Herald, here in India as well, earnings growth is, we're not seeing upgrades. For the last at least 2 or 3 quarters, we are seeing full year estimates being brought lower. Small, but at a headline level, that's what we've been seeing. Just a quick point, Herald. This entire talk of, waiting for this recession, it's been the most overused, jaded kind of thing. Maybe it's a timing thing, and perhaps at some point later this year. But timing matters, right? I mean, how do you think about this? Go on.
Absolutely. So 12 months ago, literally, what is it now? It is the end of May, right? Early June. Gas prices in Europe were rocketing higher. There was a war developing in Europe. The consumer was seen to be fiddle, and everybody said Europe is going to be in a deep recession by the end of this year. Turns out it's not. And by that, 12 months ago, we also thought that the US would already be in recession. Turns out it's not the case. There's much more robustness in these economies than we as markets, I say, originally anticipated. And that meant that a whole repricing had to take place. Bond yields had to go higher, interest rate expectations had to go higher, inflation expectations had to go higher. That's absolutely right. And the feeling is now that probably this is just being postponed for the next 12 months. It will happen. But if you then look at the markets that have done very well, that is Korea, that is Taiwan, that is Japan. Those are global cyclical markets. It's those markets, those exporters that have been repriced and have done very, very well over the course of the last 6 months or so.
All right, Herald, we'll let you go on that note. Thanks a lot for joining in. It was a quick call today, but we'll do a detailed one at another point in time. Looking forward to that. Thank you for joining us. That's Herald Van Der Linde of HSBC. He's been a long time India bull and continues to remain that way. Let's slip into a quick break. On the other side of the break, our entire team will be joining in to help you prep for the day and give you all the top 10 stocks to watch out for. Stay tuned.